A slowdown in Australia's mining investment boom is working its way through the jobs market. Engineering jobs were in surplus in the September quarter, according to the latest Skills Indicator survey from Clarius Group. Last year, the sector had a shortage of available professionals. Well, let's get some more now on all of this, and we're joined by Kym, CEO of Clarius Group. Kym, great to see you as always.
Thank you.
And to hear about the latest findings here. Overall, the surplus job seeker numbers that you're seeing in that skilled part of the market, what are you seeing?
Basically, what we're seeing is that the oversupply is significantly higher than it was during the worst of the GFC, which, of course, for Australia, we were softened from the really bad impact of that due to our mining and resources boom. Clearly, over the last 12 months, we've seen the decline in that sector really impact jobs, and we're now in a fairly significant oversupply, and we expect that will actually worsen over the next 3 to 6 months before we actually see an improvement next year.
So how sort of worse is it going to get, do you think?
Well, if the oversupply is currently about 134,000 more workers than there are jobs, we expect that to go into the mid 140,000 range before we see that drop back down, probably the latter part of next calendar year.
Right, okay, so, I mean, how does that translate into sort of the unemployment rate?
Yeah, we've seen unemployment soften in the last quarter. It's gone from 5.8 to 5.6. That's really more off the back of a reduction in participation more than it is an increase in demand, which is a really interesting undercurrent that's happening in the employment market. What we're actually seeing is a lot of people saying it's actually too tough at the moment in my sector. They're either leaving the employment market to go and get re-skilled in a sector that has more potential, or they're just taking time out and spending more time at home with family or travelling overseas, and that's a really significant trend that we've seen over the last 6 months.
Absolutely. So just firstly, I guess the drivers of this, worsening this oversupply, is it mainly due to the slowdown, do you think, in that mining space, or, softness elsewhere?
I think if you look at the sector by sector, or the occupation by occupation numbers, it shows a really interesting story, and that is at the higher end of the skill market, it's still balanced and actually tipping into undersupply. It's really at the lower skilled end of the market that the main oversupply is, and that's particularly prevalent in the clerical and admin worker sector. And that has to be largely attributable to the fact that we've seen a lot of those roles go overseas, we've seen automation of a lot of those functions, and overall we're just seeing a change in the way businesses are operating, which are making those skill sets completely redundant.
What could turn things, as you said, so you're thinking latter part of 2014 when things start to improve in the labour market, so what's going to turn that?
I think more confidence. We're really a sentiment-driven market in many ways at the moment. I think a bit more political stability, a little bit more policy around stimulating those sectors, and seeing the retail sector come back will certainly help in that lower skilled end of the marketplace. But look, largely I just think next year will give us a little bit of runway in terms of stability, and both here in Australia and overseas. It will help employers be more confident about starting some of those projects that have been sitting on shelves for 2 or 3 years.
Yeah, and I mean, as you mentioned there, you're talking about sort of that, I guess, the lower end in terms of the skills market, and I mean, does that sort of reflect what companies have been doing to try and manage these uncertain times?
Absolutely. I think everybody's becoming leaner. They're doing more with less, and some of those really traditional functions like PAs, EAs, administration people, receptionists, all of those functions are really being absorbed into other functions, or automated or outsourced.
So just in terms of sectors then, if you could talk about, I guess, where the worst of the oversupply is right now?
Yep.
So is it mainly engineering?
Engineering's one of the more significant ones. IT, we've seen a huge softening in the IT space in the last 12 months, as again a lot of infrastructure projects and technology projects have been shelved off the back of a lack of confidence. As I mentioned, the clerical and administration sector, that's another big section of oversupply. So it's really those are the top 3. The others are balanced in oversupply, but what we would classify as balanced in that it's not a significant oversupply. And I think what we need to be mindful of, as we sit here talking about oversupply, is when that market shift does happen, very quickly we will move into a situation of undersupply in some of those really critical skill sets, and I think that's really the focus of what we should be looking at now, and trying to address those issues moving forward.
And any sectors where you could see that happening first?
Probably the two that are in oversupply at the moment, which is IT and engineering.
Well,
pre-GFC we saw them in significant undersupply, and that was a real impact on the growth of a lot of businesses, and very quickly I think we'll see that. And, bear in mind, of the 134,000 excess workers, only a small portion of those are in those sort of higher skilled areas. It's the majority that's in that lower skilled area that really need to be looking at how they reskill to maybe move themselves into some of these other sectors.
Yeah, well, just on that, because I mean, what's the sort of trend, I guess, are you predicting, or your sort of outlook then for the way that the labour market's going to look next year, given, as you said, I mean, there's a lot of people who've just given up at the moment, they've gone to reskill in other sectors. I mean, what's that going to do to the face of the labour market the next year?
Yeah, look, I think structurally the labour market has changed slightly too. I don't think we'll go back to the way the market looked in terms of where skills are and where demand is in 2005, 2006. I think fundamentally technology has changed. A lot of roles in business and a lot of roles in organisations. I think what we should be focusing on is helping people to skill up in those critical technical sectors where we've actually seen a significant undersupply of talent coming into the universities. So we know that will play itself out over the next few years, where we see demand increase in that sector, yet that supply that's coming through the education system has diminished.
Right, okay, interesting. So overall, though, your prediction for the peak in the unemployment rate is
6%. Yeah,
and whenabouts, you think?
We're looking at that in the March to June quarter of 2014, and subsequent to that, we think that will decline before the end of the year to about 5.8%.
Okay, and I mean, so that still is below that RBA forecast and the Treasury forecast as well.
Yeah, absolutely. And look, I think again, it's the numbers underlying that is where the critical message and the critical story actually lies. And look, I guess our sector is very much driven by two things. One is growth, the other is churn. And once you start to see confidence in the marketplace, people start to change jobs, and that sort of generates activities. So I expect that we'll start to see that happen before we see growth-driven employment opportunities. But as an employer, I think it's really important to be mindful of hanging on to those good people now, because they will be very hard to replace this time next year.
All right, Kym, it's always great to get the latest on the labour market. Thank you so much.
My pleasure.
Kym Cook there, CEO of the Clarius Group.